Bitcoin beats buying a home, and it's not even close. This is the title today. So glad to be joined with Joe, Forrest Huddle, Rashad. What's up, you guys?
Just holding it down here in Canada. Missing our fifth member today, Brandon. He's MIA. He actually might be in Canada today. I found out. I didn't realize how close to the Canadian border Brandon was. So it takes him about an hour and a half to get into Canada.
Wow. I didn't
That's
know that
crazy.
either.
How are you doing, Robin?
I'm doing better. Like, I got knocked out from Peter Schiff last week.
Yeah.
Wait, what do you mean?
What? His lip.
My lip.
Oh, he knocked you out.
No.
You actually get in a fight?
No, but yeah, it's getting better. It's still an annoyance, man. It's like the lip, like it's really like even a small thing, you know. Like if you have the same thing somewhere else, nobody cares. But the lip is a weird thing. But I, as we said the last, I think 1-2 times, I went back and saw comments. YouTube has an amazing feature. I want to show this to you guys because this is how I will take inputs from the comment section in the future, and I think if you guys know it, it's easier. So that's the YouTube studio behind from BTC Mastermind, and there's like a really cool feature. You can just say contains questions, and so I think you kind of have to form it as an actual question, so YouTube can pick it up. And then there was one guy, and I like that because I think a lot of people actually think about that, and also a lot of people that watch Bitcoin content think about that. I think if we are into Bitcoin a lot, we don't think about that because we're like, of course I buy Bitcoin. But if you're not in it like 24/7 and like read already 100 books and went down the rabbit hole for like 1,010 hours, it's a question that a lot of people have. And so that comment inspired the whole episode, and let's see where we end up. And Ben here just asking us in the last episode in the comments, hey guys, any thoughts on investing in Bitcoin instead of buying a home? I feel like there is more to life than a property, but TradFi tells me I'm wrong. Lol, curious what you all think. Thanks. Any thoughts of Rashad, Joe, Forrest?
TradFi's been wrong about Bitcoin this whole time until, like, I mean, why did it take until 2024 for there to be a Bitcoin ETF even, right? Took until 2020 for the first company to meaningfully buy Bitcoin and put it on their balance sheet. There was a lot of education, a lot of time, a lot of ability to buy Bitcoin before that. And the entire time you've got to go against what TradFi was saying. And it's really only now that they're beginning to wake up to it, and it's still yet just a 5%, 5% of your portfolio kind of concept from people like Morgan Stanley. Even there was a Charles Schwab released like this educational video about how to hold Bitcoin, and they talked about they conflated risk and volatility, which short-term volatility is a risk, but it isn't inherently risk, if that makes sense. It's not a risk that can't be mitigated. So, these are like, it's all just about education, and it's about, I think with a lot of it, it's also, TradFi is seemingly kind of late to this, right? Like Bitcoin is money. Money is a financial concept. These people are financial educators and actors. And so they should understand it, and they don't. And they're pretty far from the understanding that us everyday plebs have. And that's why people come and listen to us about Bitcoin, because we're far more educated about it than they are. So they got a lot of catching up to do. And you can look at so many other aspects of the financial TradFi industry and realize how wrong they are too. Like, why should you be using a financial advisor when they underperform a simple index fund? Why should you be buying locked in illiquid mutual funds to get 1 extra percent, maybe, if you're lucky? Or you're, investing large monies in hedge funds, which they know they're going to underperform the S&P, but it's a hedge, right? They're diversified in a different way than the S&P, and that's what you're paying for. And you're actually losing money from that. So there's a lot of nonsense that goes out there with TradFi, and so I'd be wary of it all. And that includes the concept of ownership of property, which you can even debate if it's even real ownership. And I think it's different. And I think there's a little nuance there where it's different if you're talking about buying your own home to live in, and there's a difference between buying property and real estate as an investment. So we'll get into all of that, but those are my just initial thoughts on that.
That's a good way to start, I would say. I echo the majority of things that Forrest said there, and I think that Wall Street is finally catching up. I mean, it's the one thing I learned pretty early on in Bitcoin is the concept of following the incentives. And Forrest alluded to the mutual funds and the products offered and the return and how the whole system itself works. It's completely backwards to me because, again, people go to these advisors for advice. We're talking about TradFi here, about how to set them up better financially. And, the majority of financial advisors that I've known in my life and have known for the last, decade or so, they spend more time on the phone with their clients than they do looking into what's next. It's just kind of, it goes into the machine. There's certain unique products that some firms have and some don't, but there's, on the other end of that, there's usually a kickback to the advisors. And the more they purchase of that certain product, the more that comes back their way. So in Bitcoin, it's a little bit different. It's almost roles reversed, where we spend the majority of our time trying to figure out what the best option is here as we're having this conversation today. And we don't ask for any fee. We're on YouTube for free. Anybody can watch this right now. So it's just a different system, I think. I think that it really depends on, the purpose for the house, the area, how long you plan on being there, because there's a lot to it. There's a lot that goes into it versus just owning and renting. But the one thing that I keep thinking about every time I see somebody selling their house for Bitcoin is I keep hearing Klaus Schwab say, "You'll own nothing and be happy." And again, kind of, but at the same point, I catch myself because what Forrest said there is absolutely right in the sense that you don't really own it. You don't own it because everybody knows this who would be watching the show, but you stop paying your property taxes and you find out pretty quick who owns the property. But there is still something there in terms of like being rugged, being susceptible to risk, because if you have a landlord, you could get rugged. It's almost like a third-party risk there that at any time they could decide that they want to fix their house. They could do some renovations on it, and you're looking for a new place to live. So there's a bunch of trade-offs there. I'm actually really excited for the conversation today about this because I think it's on a lot of people's minds right now.
Yeah, I don't think it really makes sense to buy real estate as a savings vehicle, and that's exactly what a lot of people do. They don't think of real estate as, I mean, they say that, oh, it's because it has utility, that's why houses are valuable, but they're not buying houses for that utility. They're buying it as a savings account. And a lot of people, I mean, really, when you think about it, the financial services industry makes money from you not quite understanding how it works. So if they're telling you to buy houses, it's because they make money from you. And once you grasp that, I mean, everything is about profit. Everything is about that motive where they want to bring in customers. They need customers. The bank needs customers who are willing to buy more houses and who are willing to borrow money to buy more houses, because if they don't find customers, then the entire system just falls apart. That's what needs to happen. They incentivize you to buy houses by giving you low interest rates, even though you're actually getting screwed over, and they're just taking a cut out of the money that you make. They're taking a cut from really not doing anything. I mean, they print the money out of nothing. They convince you that you need to get a mortgage. People buy houses. They increase the demand for housing, and the banking system just makes money from doing that. So why wouldn't they keep doing that? Once you understand the incentives and you start questioning them, everything just changes. Everything pretty much just falls apart.
Yeah, it's really interesting. And I think we all, and probably most of the chat agrees on, it's not a good idea if you already own a home to invest in another one and just like buy Bitcoin with that instead. So I think for the sake of this video, because we also want to keep it short today with like about an hour, let's focus on like the specific thing, like buying a home versus renting a home. So like the one option would be you rent a home, and instead of having a, I don't know, 100K down payment, 50K down payment, 200K down payment, whatever, your house will cost in the end. Putting that into Bitcoin and saving, maybe even like having a cheaper rent than the mortgage. I made some calculations with two similar homes versus renting, and in all my cases the mortgage was higher than the rent, and I had to do a down payment. I don't know, I just did like one example, so I don't know if this is always the case, or the mortgage can also be cheaper than the rent. What I keep coming back at it is, if you get really attractive rates for a home and you have only a little down payment to make, so you are extremely financially well off and the bank is lending you a lot of money, and you don't have to put in a lot, it can make financial sense. The question is, do you want to have it emotionally? I mean, that's also another thing we kind of have to talk about. Some people just want to own a home emotionally, like, and if you're that person, there's no debate. Like if you feel better in your own four walls when you own the place versus renting it, I think there's a, if you can do it, you probably should, because you just feel better and that makes you more productive. This will allow you to do things. I don't know how you guys think about that, but yeah, like there's a lot of different thoughts on renting and buying Bitcoin with a down payment versus buying the home and just like buying a little bit DCA in Bitcoin next to the home. What are you guys thinking?
I mean, if that's the question we're going with, is like, if you had the choice, if you had a bunch of money that you're sitting on right now, or not a bunch of money, but enough money to purchase a house via down payment or put that into Bitcoin right now, I think without a doubt, regardless of what's going on, unless it's like your dream property that's only going to be around for, scarcity, I guess, and desirability are factors in this. But for the most part, I don't think that's a thing for people. So I think that my decision with that would be put it into Bitcoin, hold off on it. I just see such a huge variance and discrepancy between Bitcoin being incredibly undervalued and housing being incredibly overvalued right now. And so I think the one thing that Bitcoiners do very well is they delay gratification. So the other nice thing about renting is that you're very flexible. And, at a time like this in the world, lots of uncertainty, lots of chaos, I think the more flexible, the more agile you are, the better off. And that to me is renting. And so that would be my decision. I wouldn't be buying a house right now. I wouldn't be sinking that into a down payment. I would be buying Bitcoin and just kind of waiting to see what happens over these next couple of years.
I think there are benefits to buying houses. For example, like my house, we bought it in 2019 or 2018. And today our mortgage is like 2,000 Canadian per month, or like 1,400 US for a townhouse. I think that's pretty good. So there are benefits where basically you're locking in your price. And I think the asset isn't the actual house. The asset is the mortgage, the ability to borrow money and bring your future consumption to the present. And you just have to find a lender who's willing to do that for you. And banks are willing to do that. So why not take advantage rather than buying the house in cash, use the mortgage? So if you're, let's say, for example, if you do have the means to get a mortgage, I think it's worth it. Let's say, for example, if your down payment is really small, like let's say they say, oh, you can get a 40-year mortgage and you only have to put 5% down or 3% down. In that case, it's definitely worth it. Even though you're paying, like, let's say, property taxes, you're paying for all those things. If you consider that, I mean, it makes sense because you have stability, right? And I think that's something that a lot of people are missing. I think entrepreneurs need stability because their income isn't stable. And having that stability in my mortgage made a huge difference for me, and it really helped me to take more risks in my life. So if you look at it from that perspective, that could make a difference as well. There are always trade-offs. There's no perfect solution. I think that's the key. For every single person, there's a different situation, different solution. You have to look at all of those solutions before you actually come to your answer.
I think we should double tap a little on why the mortgage itself is the asset. And it's partially because you're taking on debt, and you probably get pretty good rates on that debt because the entire property ecosystem, the banks and everything, they all want this system to perpetuate itself. So they're willing to give out loans at really good rates.
Yeah.
And you take on the initial capital ahead of time to buy an asset. And this asset is a home, and it's going to perform at some kind of average rate as an asset that increases in value. And then the debt actually gets cheaper over time because you're paying, say, 5% on an interest rate, and the money gets debased at 7 to 10%. So it gets easier and easier to acquire more dollars into the future as the money becomes more available. And that's where the arbitrage is. And it's essentially like a huge leveraged play when you buy a home. If you put 5% down, 10% down, that's massive leverage that you're taking on by taking on that debt. And that's why even if housing only performs at like 5% annual or whatever, you're so leveraged to it that if you calculate it off your initial down payment and your monthly installments, you're up massively on your investment. And I think the difference, if you were to rent, is you kind of have to think, okay, well, if everything is equal with like rent and mortgage payments, and you're kind of, mortgage payments will do this like forced equity thing where part of your payments every month, not maintenance, or maybe some of maintenance might, but like property taxes, insurance, these are not going towards your mortgage, right? Your mortgage payment goes towards your mortgage. So it's like this forced investment that I think happens. And I think that's why a lot of people end up having a lot of wealth in their older years, because they've been forced to invest, which is probably something they didn't do anywhere else. But if you take all of that investment that you make and the down payment, and you were to buy Bitcoin instead, you're buying something completely unlevered in that situation. And that still has potential to completely outperform even the leveraged asset of real estate. And that's kind of the bet you need to make between renting and getting a mortgage. If all things else are equal, like ability to get a mortgage or ability to rent a place, which some people qualify for one or the other in different places. So that can be a challenge too. But like, I think that's what people are not understanding, is just how freaking leveraged you are when you have a mortgage and buy a home.
I think the down payment is an overlooked aspect of the whole calculation, because if you have a down payment of, let's say, 20%, I made the calculations with a 4%, I think, interest rate once from Assist. I think we discussed it even on this live stream beforehand. If you make that, you just need to buy with that down payment an asset that goes up 7% or more in the year, and you're actually outperforming your own real estate property. But if you have a down payment of 3%, 4%, 5%, or like 2%, you are so leveraged that even if that real estate property just keeps up with like 3% appreciation per year, you're making so much more gain in purchasing power every single year that it's really hard to invest in something that keeps up with that, because you like almost paid nothing down, and on the other side you also have to pay rent, and you also have to pay maybe your own furniture stuff and all of those things. So even if you're renting, most of the people buy their own furniture, and so I guess it's not as satisfying as an answer as some might want to hear it, but it really depends on your down payment and your interest rate and your personal situation, because you can't just say, yeah, the one thing is better than the other thing, without knowing, okay, what are the variables, what are the inputs, what are the down payments and interest rates.
I mean, from my perspective, I 100% agree, Rob. And I just think that based on where we are right now, this second in the markets and everything going on, my answer would be clear cut rent instead of buy a house right now. I just think that there's a lot to factor into it. A lot of these calculations, what you guys are saying is 100% accurate. It's just that I just feel like the housing market, especially here in Canada, and again, I guess it could be different parts of the world, but it's just so inflated. It doesn't make any sort of sense. It's all still based on real estate being a store of value. And what we're seeing more and more each day with Bitcoin, with products like Stretch, is that real estate really isn't a store of value anymore. And so as soon as that capital starts flowing from the real estate as a store of value into other things like Bitcoin, like Stretch, like whatever, the market's going to come down. I believe that anyways. I know it hasn't historically happened. And, you know, if you just look at some of the statistics here in Canada and the US, like the housing market is just ice cold right now. Like there's realtors who didn't make a sale in 2025. And you compare that to the last couple of years. So that to me is a trend that real estate prices should be coming down simply because there aren't enough buyers for the amount of people selling. And, you know, it's going to get worse. The people who are 70, 80, 90 years old right now, there's going to be a lot of those houses coming on the market in the near future. And, you know, to me, it's a no-brainer. Just put it into Bitcoin, especially considering, you know, where we are. We're 40% down from the all-time high. There's a lot of traction. There's a lot of momentum building in Bitcoin. And I just think that you'd be crazy to put that into real estate right now, unless it's like your dream property. That's my only exception there. But I saw a comment that's kind of worth discussing here, because that's one of the main arguments against owning a house is that you have to pay property taxes. And somebody in the chat said it's built into the rent, which it is, right? Like that's the reality of it. I was a landlord before, and as a landlord, you'd have to look at all your costs, which includes property taxes, and then you'd pass that on to the tenant. So even though you're not paying the property taxes directly, you're not sending a check to the city or the municipality, you are still paying property taxes for it. It's just disguised, I guess, as a renter. So that argument from that perspective doesn't really mean much to me, but just where the two, you know, the values to me and the market is right now, I think that it's a much better bet going in Bitcoin right now.
As an individual, you have to be looking at where is the value? Where can you see value? And what can you see as potential futures? So like, for instance, I rent, and if I was to buy and look at all the expenses of a mortgage with, you know, 5 to 10% down and all the costs that would be associated with living there, I could get a 2-bedroom, no yard apartment, or I could rent a 4-bedroom with yard in a nice neighborhood for the same price. So there's a huge difference in arbitrage between buying and renting in my current location. Massive dislocation. And part of that is like, even though property tax and all this is factored in, the person who owns the house that I rent in, they bought in 2018. So they're just looking for somebody to cover mortgage, rent. Hopefully the house will appreciate, a little slight premium to deal with maintenance, but their cost is way lower because they bought so long ago. So that everything is calculated on that. And, you know, and then again, I completely agree with Jor here, where there's a massive monetized premium on top of real estate. People are thinking of it as an investment, just as my landlord is, where he'll pass this home on to his kids. And yeah, they didn't make that much extra from charging rent because I got, you know, these really did give me a good deal here. But the home has appreciated so much, or at least that's what he's hoping. That's the bet he's making. And that's not a bet I would be willing to make. I think it's going to appreciate probably in line with inflation. And I think Bitcoin is going to rapidly out appreciate that. So that's the bet I'm making. And it's a dislocation, right? It's an asymmetry of knowledge when you look at these kind of things. I think anything with a monetary premium that doesn't deserve it, right? Houses should not be investments. They should not, like, there's certain properties that could be, even on a Bitcoin standard. But the vast majority of homes do not start to make sense in that way on a Bitcoin standard. So I think I think gold gets demonetized. I think stocks do. I think real estate does. A lot of that premium comes out and goes towards the best sound money over I'm talking decades here, and that is Bitcoin. So that's the bet I'm making as a renter. But it's in some cases it does make sense to buy still, even with all that said, because there's a dislocation in the opposite direction potentially.
I want to double click on something that Shore said. You said something around like you're wrong so far with real estate crashing down, something like that, that you like the real estate prices have gone up significantly in the past years. I'm in the process of writing a book, as some might know, but and so I do a lot of research on that stuff, and so I looked it up, and I was like, okay, has real estate actually gone up? And of course, it's, I think, not fair to compare real estate now to Bitcoin. I get that. Like if I pull up the 10-year chart of Bitcoin against real estate, obviously it looks horrible. And I don't know if it's fair right now to do it, because Bitcoin is such a young asset that grows very fast. But I think it's fair to compare real estate to gold. I think that's a fair comparison to compare those two together. They're both there since forever. And so if you look from I'm born 1998, so like this is about as old, the chart is about as old as I am. And since then, obviously, real estate versus gold is the Schiller case home price index, which is, I think, one of the most popular ones, which I found. Real estate actually has gone down like significantly in the past 25 years against gold. And gold, yeah, of course, gold has been an amazing investment the last 1 year, but it also has gone down in the whole 2010, 2020. So it's like, obviously, it's not as good as it maybe sounds, because if you compare it and if you measure it in US dollars, if you measure it in something that is not debased away, real estate all of a sudden goes down. It still might make sense, because you can buy 100 units of real estate with just like a 3% down payment, and you get the 100 units. And so you get a massive leverage on that 3% gainer, as I said before. But real estate is not doing good. And then if you compare it to Bitcoin, obviously it's a lot worse.
A lot worse. That's a great comparison, though. I think that's should be a real eye opener to people, because that's the illusion happening right now. Is everybody thinks their house is going up in value, but it's not. It's going up in fiat money. And the only reason why it's going up is because they're printing more units, and those units follow stores of value. And since 1971. Real estate has been one of the better stores of value. But when you measure it in something real like gold, that cannot be inflated, that cannot be changed with government policy, it sure looks a lot different. So I had one more point that I wanted to add with that, but I'm curious to hear what Rajat has to say on this.
Well, I think in general, it doesn't really make sense to buy real estate as a savings vehicle, just as an invest. I don't think you need to buy more houses than you need. Just buy the one house that you need. After you buy that one house, even then, buying that one house may not be worth it if you do the math. But I think there's more to it than just the math. It's about the stability. It's about being able to raise a family. I think having a house is probably one of the greatest ways to become free, because you're not constantly relying on a landlord. You do everything yourself. I like that aspect of owning a house, but there's also the other side of things where if you plan to move soon, then it doesn't really make sense to buy a house. So let's say you buy a house and you plan to leave within 5 years. You're probably not going to make back the fees that you have in appreciation. Let's say your realtor fees, they're like 5-6%. You have to pay land transfer taxes. You have to pay for a moving cost. You have to pay for all that stuff. If you only plan to live there for, let's say, 3 years, it doesn't make sense. You're not going to make the money back, because your property could easily just go down. Whereas, let's say you plan to hold a house for 30 years, or you plan to stay there forever, like you plan to plant roots there. In that case, it would make sense. So it really depends on your personal situation. And even in the beginning, most of the money that you pay towards your house is going towards interest. So if you're selling your house, I think the number is, if you sell before 8 years, then you're probably at a loss. And most people sell on average in the US within 8 years. So it doesn't really make sense. And then on top of that, I don't know if you guys know, I've mentioned this before, but there's a statistic that shows that 10% of houses in the US are unoccupied. So there's no shortage of housing. People act like there's a shortage. There is no shortage. There are abundant houses. It's just that people are holding on to as many houses as they can, and they want to get loans on them. And it doesn't really make sense for them to, the rules and regulations that we have make it so it doesn't make sense for them to repair the house, because they can't make back their rent. Like in New York, there's rent control, and a lot of places just sit empty because for the landlord to repair it and to make it livable, it costs so much money, and they wouldn't be able to make back the money that they paid to repair it. So all those things, I think all those are factors. To me personally, I would never want to buy houses as a savings account. I mean, the work alone is just not worth it. Why would I want to deal with a tenant? I don't want a part-time job.
There's so much risk too. Like even what you stated there, where a house becomes essentially unlivable in the state of New York.
Yeah.
You could technically live there. There might be a couple dangerous things or whatever, but it also becomes unsellable because to fix it up costs way too much money that it ends up not being worth it. So now you have an asset that you're stuck with, right? This is a completely illiquid asset at that point. And I find real estate so risky, so much more risky than people think it is. Like there was a huge boom of real estate and people moving to Austin a few years ago. And Texas doesn't have the regulation like Canada has, where they restrict a lot of building, right? There's a lot of land in Texas, so they just allow you to build. And the real estate went up, but then it came right back down. And it's not because of lack of demand. There's still people moving to Austin more and more, right? It's still growing, but it's because they're allowing people to build. So real estate value did not continue to go up based on demand because the regulation was different in that specific jurisdiction. And those things can flip and flop based on who gets elected. So like, it doesn't matter. Like there's certain things that will pump up the price of Bitcoin, like jurisdictional and regulation things as well. But like none of that fundamentally changes the asset. Like Bitcoin is global, liquid, and completely decentralized in the way that it's developed and it currently exists, the network itself. So it just feels a lot safer. I would worry about owning real estate for so many reasons. And I have owned real estate in the past and thought about renting it out. And then I was like, well, I'm not going to live next to the home. There's big trees. What if a tree falls on the house? What if my renter doesn't pay me? It feels so scary to have all those vulnerabilities. And then I just sold it for twice as much as I bought it for, because I lucked out with timing, and then bought a bunch of Bitcoin with it. And I just sleep like a baby that sleeps well. And I'm fine with Bitcoin.
You're also giving somebody a significant portion of your wealth, and they get to do whatever they want with it. Right? Like when you think of it that way, you buy a house, it's a significant portion of your wealth. You're giving it to someone, and your insurance can just be like, wait, we're not covering you if they do something stupid. Right? Like what if they just burn the house down and it's intentional, and the insurance is like, we're not paying you for this. What are you going to do? What if the guy has no wealth for you to take from? You're never going to become whole again. Right? And then on top of that, I was talking to someone, and he said that in LA where the fires happened?
Palisades in LA, yeah.
Yeah, and they said that some insurance companies are no longer covering for that kind of damage anymore. They're not even insuring houses anymore. So what happens if you own a property and you need to get rid of it, and suddenly your insurance company says we're not covering it anymore and you can't sell it? Who's going to buy a house that you can't get insurance on?
There are so many problems with real estate.
Completely outside of your control.
Yeah, completely out of your control. You have no control over that.
I think the other part of it too, like Rajat, you were talking about what was it now? And I have so many thoughts on this. I'm having a hard time keeping track of it. But damn it, what were we talking about there? Property tax? No. Maintenance? No. Shit. I got distracted, boy. Sorry.
I have one more point. Maybe you think about it before, because or after that, because I think we focus in Bitcoin a lot on like gold, and now we also focus on the bond market, and we focus on all those things. But real estate is actually the biggest market of them all. If we look at the Jesse Meyer chart, which is, I think, a chart that probably every Bitcoiner has seen in his life at some point. It's probably the most shown chart in all of Bitcoin. But here, the biggest chunk is real estate. And so if you know what we know of Bitcoin and you believe in that, and you're thinking about buying a home, you have to see those two buckets. We have on the one bucket Bitcoin at, I think it's a little bit under 2 trillion currently. It's probably like 1.5 or so. I'm not sure about the market cap currently, but it's 2 trillion or less. And then we have real estate at like 150x that, or probably like 200x of that value. How much of that is utility value? How much of that is because people own a home? And how much of that whole value is just monetary premium because people buy a home, not even rent it out, just to park some cash there? How many in Vienna, in Austria, where I'm living, there are so many ridiculous tax benefit for business owners to buy homes that my tax guy already told me 2 times, oh yeah, like if you this and this, then you can just buy homes and you can do this. And I know a guy, and I'm like, I don't want to buy homes. like what are you talking about? But like, it's the tax strategy number one, is at least in Austria. I don't know how it is around the world. And so it's like, we put everyone into this like real estate, like buy a home, and if you have a lot of money, buy apartment complexes and commercial real estate and all of that. It just props up the whole market, and I think real estate is poised to completely fall apart, especially in Bitcoin terms. I think in US dollar terms it will always go up because US dollars will fall apart faster than real estate. With that small caveat, as also Rashad said, it can still make on an individual basis sense that you buy a home. And hey, if you have a lifestyle choice to make, I think it's very valid. Like if you know that place and it's the dream home and you want to be there for 30 years, like go ahead and do it. But think about how young Bitcoin is and how old and huge real estate is, and see which horse you want to kind of bet on.
You know, that's the point that I was going to make there, Robin. Actually, you reminded me of it there, because that's what I was talking about before. I think that you mentioned that real estate has definitely gone down in gold terms and in real terms, but I also think that real estate is going to go down in fiat terms at some point here. And I know that's the hard part, I think, for people to imagine right now. But I think the only reason it hasn't started to go down, or I might be wrong about this, you know, if you go year to year, it actually might be down from a couple of years ago today. But I just feel like the average person has this mental block in their mind that their house is always going to go up forever because it's a house. But that's just not reality. Like there's so many different factors involved with that. And especially because there has been such a premium on it, as Forrest talked about before, that's what's kind of raised the value of it. It's not because they've made improvements to it. It's not because their neighborhood's better. It's not because they put up a school right beside it. It's because they printed more money. And it's because people have been storing their value in real estate when that's not what real estate is designed to do. Real estate's designed to be lived in. And so I think that, you know, I think what's going to play out here over these next couple of years, housing prices have probably stabilized. I don't know. Can someone double check that for me? Is like what the house prices have done for the last couple of years. But like eventually people are going to get to the point where, I guess the question is, why are they selling the house? If it's their second or third property, maybe there's less of a rush. But if they can't afford to make their mortgage payments anymore because the interest rate changed or they lost their job or whatever the situation is, as time goes on, people are going to get more and more desperate, and they're just going to have to change their mind in the fact that, hey, maybe I'm not going to make money on this house like I thought that I was going to. And that's when we're going to see a bit of a pullback, even in fiat terms. That's kind of my outlook for the next couple of years. I don't know if you guys agree with that or not, but it just makes sense in my head that would happen.
It makes me think about the demographic shift as well, where there's all these boomers, right, that are looking to retire, downsize. They have assets in real estate that they need to offload. And, you know, you can look at like, again, like different generations will have different amounts of children, which will like the whole fiat system and pension system. And so much of this is all built on this idea in the past that generations were always going to get bigger. And it really isn't the case. It's quite the opposite, actually. And you can see how certain nations have really struggled with this, and they try to offset it with immigration or different types of policies. Like Japan has basically dealt with it the best, but they have one of the worst like generational gaps because it was so unaffordable, and like the whole work ethic and everything was just structured to not have children essentially. And then you have a very small generation looking after an older, larger generation. It just that's a hard way to prop up a Ponzi, which is essentially fiat and all of that. I did want to mention one thing before we move on, though. Robin, do you mind just bringing up that chart again by Jesse? If you look at the pump that MSTR is, that it's connecting and siphoning value and putting it into Bitcoin, it's also providing lifelines within those ecosystems, which is kind of interesting. So bondholders that are looking for income, they might have to make a switch and understand what a preferred equity is, or accept a preferred equity risk instead to be able to get short-term income and fiat income. And same with money, right? Money markets is what STRC is speculatively attacking or being involved in. But all of those actually create lifelines within there that prop up some value within there because it is connected to Bitcoin. But you can see there's no lifeline, no connection to real estate. So if there's all this monetary premium in real estate, and I can't think, like maybe somebody else out there that's more business minded and understands real estate, I can't think of a way to make real estate make sense where it is actually connected to Bitcoin. How do you monetize it with Bitcoin?
I think the only thing that makes sense in that case is borrowing against your real estate. And again, it just goes back to the asset not even being the house. It's the asset is the loan. But you can get better loans with Bitcoin. Like eventually the loan interest rates are going to fall on Bitcoin, and they're going to be lower than mortgages because it's easier for lenders. Like anybody who has money can lend against Bitcoin at any time. If I had like an extra, let's say I had an extra $1 million and somebody wants to borrow $1 million, I can just set my own rate. Like, hey, give me 5% and I'll take your Bitcoin as collateral. You can give me back that $1 million whenever you want, and I'll just take whatever my fee is out of your Bitcoin. Like it's that easy, and it'll just get easier and easier. So like you said, it doesn't make sense. There's no way for real estate to survive through this. Real estate is going to die as an asset. It's not going to work. And then something else that
as it should.
As it should, exactly. And something else that Robin was talking about before, like there's so many incentives for people to buy real estate. Why? That makes no sense. Apparently we have a housing shortage, but you're telling people to buy more houses. That makes absolutely no sense. It just shows you that everything is sketchy, right? It's all just designed to, it's told to us like, oh, it's because we care about you. We want you guys to be wealthy, and we want you guys to be secure and financially free. But that's not the reality. Like that's not what they're trying to do. They're just trying to take more and more money out of us. It's just a way to suction more money out of the retail investor, out of the renters. It's just more and more. It's a way to take money out of the working class. And people don't see that. They think that real estate, mortgages are a great way for people to be able to buy houses when they can't afford them. But in reality, no, real mortgages are the reason why house prices go up. It's because more and more demand is being brought from the future to the present. And now, and it's all falling apart. And you have to keep pumping more money into the system to make sure that people can actually pay back their loans. So it's a broken system. And I think Bitcoin is killing it. Bitcoin's destroying that system.
Yep.
And you have to look like I was really thinking about that question, because like, why are there so many incentives? You literally get pushed into houses from every single corner. You are an entrepreneur, buy homes. You are an employee, just buy a home, get a mortgage, all of those things. And if you think about you owning a country, and the country is not a country, it's like a company. How would you design? What do you want the people to own? You want the majority of their wealth to be something within your company. So, and that's a house. Like the house is in the company. It's very hard to sell. It's super easy to tax. If you just increase the property tax, most people won't sell their homes, but they will pay the property tax. And if they don't, you have the man with the guns, and they can come to your home and collect it anyways. And so what if you think about the game theory or the incentives from a nation state, would you like your citizens to own Bitcoin or own something they can move out of the company, out of the country, for example, a company? Or do you want them to own a real estate property that literally cannot move out? Even if they move out, someone else has to buy it, and the property gets it keeps on getting higher. So it's like the incentives are just screwed. So like that's why there are so many tax brackets and so many things for people to just like buy homes instead of like Bitcoin or something that flees very easily out of the country.
That's a great way to look at it. That's perfect, actually. Imagine a tax incentive for buying Bitcoin. Although in the US, I'm pretty sure they had Bitcoin mining as an incentive last year put into place. But anyways, I wanted to kind of make another point on this too, because this is something I've actually been thinking about quite a bit, just in terms of where the world is, how I feel about Canada, all these different things. The conversation also changes a little bit based on how much Bitcoin you have right now. Like if you're somebody who's just getting into Bitcoin, let's say 2026, 2025, and you're trying to boost your stack, you don't feel like you have enough. That's a little bit of a different conversation. That's where I'm saying put it all into Bitcoin, delay the house for a few years, let the market calm down a little bit. Hopefully you can ride this wave of Bitcoin that we're going to see in the next little while here. But for the people who already have a significant stack, that's where it gets a little bit interesting for me, because as much as I don't think that it's a great idea to buy a property in a city, I think the cities are kind of going to shit personally, but owning land, I think that's a much different conversation. Owning like desirable land with a water, with a stream, with free space, with trees, with a big place for a garden, that's a whole different conversation to me. And you can do a lot of different things with that. You can be pretty much self-sufficient in a lot of ways if you wanted to. And then you have much less reliance on your own government too. I mean, yeah, they could take it. Yeah, it could come to that. But realistically, like in a place like Canada or the US or even the UK, probably the odds of the government showing up at your door and saying, hey, we own this now, possible, but not very high. And so I think you can still look into options as a Bitcoiner. If you already have a stack and you don't really need more, I think land is actually a super interesting conversation just for those reasons of like self-sustainability and less reliance on the gov.
George, somebody asked, what do you consider a significant stack?
I mean, I can't answer that. It depends. Like depends
on the situation.
Yeah. If you're, I'd say if you're 30 to 40 years old, I'd say a pretty sizable stack would be half a Bitcoin. If you're 60, probably a full Bitcoin. If you're in your 20s, just get what you can.
But it also so much depends on where you live. Like, are you living in like middle of New York or like somewhere in India?
Right,
or like it's like the living costs and like your personal situation. That's why this whole thing of like 0.1 Bitcoin, like 2 Bitcoin, I don't know, like for someone 0.1 Bitcoin could be huge. Mm-hmm. And for someone else 2 Bitcoin could be nothing. Mm-hmm. So like that's like what's a sizable stack. I have actually and I do that at least once a month. I track my liquid net worth almost every single day. I do it since a very long time. It's just like a habit that I have. And I look at my monthly expenses, and then I look at the liquid net worth, like not counting anything that I cannot get to. For example, I don't know, I have a stake in Microseed, like that's like I count that as 0, like I just liquid net worth. And so just having that and then calculating against your expenses. So how many months can you live off your Bitcoin stack on all of your liquid net worth that you have, cash, strategy shares, stretch shares, Bitcoin in self-custody, all of the things that you have, dividing by your monthly expenses. Then you have how many months you have. If you have over 12, you can divide it by 12. Then you have the years you can live. And honestly, then you can ask yourself, okay, what is a sizable stack? Because if your stack gets you 1 month, that's not a sizable stack. Like you should have more than that. If your stack gets you 1 year, you're doing better. If your stack gets you 10 years, 20 years, 30 years, you're doing really good. And so we always come back to time, I guess. Like time is the real currency because like it doesn't matter like what number you have on your Bitcoin wallet. It matters like what does this translate in your actual life situation.
Yeah, I always go back to like depends on your age, it depends on your income level, and it depends on your lifestyle. Like those are the three things. And some people might have zero point 0.1 of a Bitcoin, but they have a good job. They're fairly confident they're going to have income for the next decade. And that's just kind of like their long-term savings account almost. They don't ever plan to spend it. They don't ever plan to live off it. That's just kind of like their nest egg in the background. And that's an awesome option. Like, but in that scenario there, you have income coming in. And so I think that should be kind of, something to think about for people when you're trying to figure out what size of stack you need. It depends what you're going to use your Bitcoin for. It depends how much income you have coming in. And it depends if you're somebody who, buys designer clothing online, or if you make your own hoodies. It depends on how much you think you need. And as Robin alluded to there, like, what's your monthly expenses? I think just the exercise of going through that process, Robin, would be very beneficial for people. And you could look at it a couple different ways too. Like Rajat has a great spreadsheet where he considers this, but you could do exactly what Robin just said there. At Bitcoin's current price, if you think it's going to double in the next couple of years, if you think it's going to triple, you can kind of go through each scenario and see, okay, if it doubles, I'm actually going to have 5 years more. That's awesome. But you need to know that. You need to be aware of that. You need to have a pretty good, clear understanding of your current situation. I really don't think that even most Bitcoiners have that.
Yeah, go ahead, Raja.
Based on my calculations, I think 20 times is a really good number. So if you have 20 times your expense, let's say, for example, you're expending $5,000 a month, or $60,000 a year today, you probably need like $1.2 million worth of Bitcoin today in order to retire. But then you also have to consider, what if Bitcoin were to collapse? And the more conservative that you are, the more likelihood there is that you will never have to go back to work again.
Wait, you do 20 times monthly or 20 times yearly expenses?
Yearly. So 20 times yearly. So let's say, for example, if you have $60,000 in annual expenses, you're going to want to have like $1.2 million worth of Bitcoin. And $1.2 million worth, what does that work out to be? That's probably, I think it's close to 20 Bitcoin, maybe like 18 Bitcoin or something like that today. Whatever the number is, 20 times your annual expenses, I think works really well. But that's if you use the legacy financial system's way of spending money. So in the legacy financial system, there's a study, I don't know if you guys have heard of it, but the Trinity study, where you can withdraw 4% of your portfolio in the first year, and then going forward, you adjust for inflation. So let's say the first year you withdraw your 60K, next year you're going to withdraw, let's say you assume inflation is going to be 3%. Next year, you're going to withdraw like 61,800. Then the following year, you're going to adjust for 3% inflation following year. But with Bitcoin, your returns are going to be higher. So you could potentially have more. Like with my number, it was 5%. So if you have 20 years of your expenses in Bitcoin, you can withdraw 5% and you'll do fine. And that's if Bitcoin just, that's assuming Bitcoin doesn't outperform, right? If Bitcoin massively outperforms, like let's say it gets a 30% return, you could probably get away with like 15 times your annual expenses in your Bitcoin stack.
It's a good number. I like it. And by the way, it's 16 Bitcoin. So
16. Okay.
Yeah, 15.9 currently. But yeah, it's I like that. Like it's funny because I found that method before I found Bitcoin, and I measured my stock portfolio before I even found Bitcoin with time, and it's just a fun way to grow wealth, because you're not only looking at the asset side, you're looking also at the budgeting of like, what is my monthly expenses, what is my income, and all of that. And so tracking over time how many months or years you have to live without having to do anything is a really fun experiment. And I think everyone that hasn't done that should go through just that thought. It's super easy. Just add up what you have as liquid net worth and divide it by your monthly expenditures. There you go. You have a monthly number divided by 12. You have the yearly number. And if that yearly number is 20, like Rashad said, you could retire right now. Like that's a crazy way of, because there are people that underestimate their stack. I think there's a lot of people that think they don't have enough, and then they make that exercise and they're like, oh wow, I could live like 50 years or 30 years or 20 years without doing anything, and I would still be fine. And that assuming no growth of Bitcoin, like just keeping up with inflation, that's crazy. And so if you haven't done that exercise, I urge you to do it like literally right now, today.
Yeah.
No harm in having too much, though, even if you do the exercise, right? So, I mean, it all comes back to just stacking and, you know,
That's
being
it.
responsible and balanced in your life with your expenses and the lifestyle you want to have, and knowing that likely Bitcoin will do what it does, and you'll have too much Bitcoin, and that's a great problem to have at some point.
Yeah, worst case, you just help your community. You make your community better for future generations. You pass wealth on to your kids. I mean, why is that a bad thing? I think that's great.
Yeah, exactly.
I think it's a good
Especially-
exercise. Oh, sorry, Robin.
No, go ahead.
I was just going to say, one of the exercises, we're kind of talking about a couple different things here for exercise, but here's another one that people can do, because I really feel like Bitcoiners, myself included, often have like this weird, I don't even know what you'd call it, perception of yourself and your own wealth, because everything that you see in front of you is measured in fiat terms, and a lot of Bitcoiners don't keep a whole lot of fiat. And so I couple different things here. Number one, if look at your, I love Robin's idea of like looking at your liquid net worth every morning. But if you look at your Bitcoin balance, assuming it's just going to go up, like that's got to be a pretty good feeling. Imagine if you just had a bank account where you just saw the number going up over and over again, you'd feel pretty good about yourself. And that's what most Bitcoiners are doing. They just don't really have that same sense of like, you know, pride and understanding of what this is, because those, just like dollars, are units, and they're probably worth a lot more than dollars too. But so that's one. And the other one too is like, just look at your net worth. Robin mentioned liquid net worth, liquid assets, but also take a look at your liabilities. Put one side your assets, both liquid and long-term. And then on the other side, take all your liabilities. So your mortgage, your car loan, maybe some credit card debt, maybe a line of credit. And then look at what the total is. Because I really think that a lot of people see their Bitcoin balance and they don't factor that into how truly wealthy they are. And you know, the more confidence you have in yourself, the better you feel about yourself, the better you're going to show up day to day. So I think not just like for your own peace of mind, but just like to, I guess, be more valuable and be more confident in the world. Like do that exercise, because I think you're going to surprise yourself about really how wealthy you are, even at today's fiat price of Bitcoin. And then you know, for another exercise, you double the Bitcoin, triple the Bitcoin, and it starts looking a little even more impressive for yourself. So I like doing that. That was a big unlock that I had a couple of years ago, and it really changes the way I, thought about things and thought about myself.
Yeah, 100%. It's a very good addition that you gave there, because I look at the liquid net worth and I still have some debt that is just like too low of an interest for me to pay off. So I'm like just keeping it. But yeah, it's an important exercise, I think, to do. But I think, do you guys have closing thoughts on like real estate and that whole topic that we were discussing? To do anything that we might have missed, anything that is important for people to consider in the question of coming back to the inspiration question, like I stand before buying a home or just like investing in Bitcoin?
Yeah,
I think it's important to consider how many houses your Bitcoin is going to buy in the future. So today, let's say your Bitcoin buys you a quarter of a house. Let's say you have one Bitcoin and you can buy, and a house is 400K. So just rounding, let's say one Bitcoin's 100K, you can buy 0.25 of a house with a Bitcoin. At some point, that same Bitcoin is going to buy you a whole house. Then it's going to buy you 2 houses. You can buy 3 houses, 4 houses, 5 houses. Is it worth it for you to not buy Bitcoin? Is that a smart decision? I think most people are going to come to the conclusion that it isn't, because at some point, even if you buy rental properties, let's say you can buy 10 rental properties today, at some point you'll be able to buy 20, 30, 50, 100. And I think that's key to understand, because that just goes to show you that over time, the price of a house is going to fall in terms of Bitcoin, whereas the price of Bitcoin is going to rise in terms of houses.
completely agree. And I would also just add that there's nuance with all of this. I think Rajat is just generally correct with that your Bitcoin is going to be able to buy you more houses into the future. I mean, obviously, there's nuances with, do you like being a homeowner? Do you like being a renter? Do you like the flexibility? But then flexibility with renting is also an issue if your landlord's bad, or there's all sorts of things. So there's lots of nuance with what we've talked about. This has just been our thoughts on it, some education, some things that hopefully you can begin thinking, because your scenario is going to be specifically unique. If you're questioning this, you're looking at a house that we have no idea what the details are. We know what Bitcoin is, but we don't understand all the nuance of your specific situation. So hopefully this has sparked some ability for you to evaluate that more accurately and more concise. So that's our hopes here.
Rajat, you said it's going to buy 1 house, then 2 house, then 3 house, and then 100 houses. Yeah. Because, and the reason I say is because if you actually take I know you guys have heard me say this before, but simple math, you take the total number of sats divided by the total number of houses in the world, and it equals about 1 million sats. So if only houses existed in the world, if that was the only asset we had to measure, the average cost of a house would be 1 million sats, measured in a Bitcoin world. So you could actually buy 100 houses with that 1 Bitcoin. But the thing that I'd say is, if you have a significant stack of Bitcoin, or you're satisfied with your stack, I know you should never be satisfied, but people who hear that understand what I'm saying. Start scoping things out. Start looking at where you want to live, where you want to be long-term. Start looking at land, what that land has. If you're somebody who's just getting into Bitcoin now and you're deciding between a house and Bitcoin, I'd say go into Bitcoin. No questions asked from my perspective. And that's where I'll cut and dry it for you guys.
I think sometimes it's not even about the financial situation. It's more about like your stability, your quality of life. If renting is not going to give you the quality of life that you want, and let's say, for example, you have a landlord, the landlord could kick you out, right? And if you need stability, maybe that doesn't work for you. Maybe owning a house would be a much better situation for you. And maybe that's something that you might want to consider. You could also, let's say, for example, there are people out there who get duplexes and they buy the house, they rent out the other half. Basically, they pay off their cost of owning or of living with the other person's rent, and that could work really well, right? There are obviously ways to do it, but again, it takes work. To me personally, I'd rather just work on learning how to educate people better, and that's my craft. I don't care to save money on rent just to get another part-time job. You're saving money on rent, but again, you have to put in the time, the effort, the work to actually make the right decision. And if you make the wrong decision, let's say your tenant turns out to be the wrong person, that could seriously ruin your life. Like that's going to have a material impact on how your life is going to be going forward. So you have to make sure that you're willing to take that risk.
I've never had a good landlord. Hopefully she's not watching this. But with that, we have 2 super chats today, so I'll just hit them before we end the stream today. The first one from T Brisket 9324, interested in your guys' thoughts on timing Bitcoin's 4-year cycle, which appears well intact. Been following Ben Cohen's channel for a few months. Are other assets more attractive at times?
Of course they are. Assets are definitely have a different attractive level if they're oversold, overbought. Like, yeah, definitely. But good luck accurately timing them consistently. That's where people trip up with this, right? Is you might think you're an excellent trader because you did it once, twice, 3 times in a row. And that confidence is probably going to make you allocate heavier, maybe use leverage, these kind of things, be more certain with your predictions, and nobody has a crystal ball. So, if the 4 years, like, I think that selling Bitcoin to get more Bitcoin is really counterintuitive. I think it does not end up working out well for people typically. I think buying more Bitcoin when it is clearly underpriced will make you have more Bitcoin in the future. So yeah, you can look at all these things, you can think about them all, but like the stress, the work of actually trading these things, because no other asset is like Bitcoin in the way that you can hold this thing for 100 years. Like right now, like oil, maybe there's a big short on oil futures. Maybe the Strait of Hormuz hasn't affected the global oil markets yet because of that strategic short on the futures paper side of it. Maybe that the effects will be felt in the future. That's probably like a 6-month period of potentially being able to trade something like oil. But oil is not something you want to own forever, because oil is just becoming more and more easily abundant, and we're just creating more and more energy into the future. So it's not something you can hold for 100 years. You can't hold oil futures for 100 years or an oil stock for 100 years and expect it to outperform Bitcoin. So you could trade it, but good luck with that.
I thought it was pretty funny, actually. During the pandemic, people were trading oil, and do you guys remember it went down to zero and it went down to negatives? There were times when people were trying to offload their position, and it was too close to expiry, and they couldn't offload, and nobody wanted to buy it. And that's why
they had to take delivery too. Have you seen that one on Reddit?
Yeah, I saw that. Was crazy. They had to take delivery of like 2,000 barrels of oil, and like the details were that you have to have like a shipping company's signature to accept it, and it was pretty crazy because like let's say somebody's just trying to trade oil and they think, oh yeah, it's gonna go up for a little while, and I'll just hold on to it, and then they like get called into something, or let's say for example you get injured and you go to the hospital and you don't have access to your computer, or you go into a coma or some shit. I don't know what could happen. There could be some wild scenarios out there, but let's say you have to take delivery of 2,000 barrels of oil. What are you going to do?
You're screwed.
How are you going to fulfill your end of that agreement? And you could get fined if you don't. So like that could be really terrible. That could be really difficult. And plus, so this person said he's been following Ben Cowan's channel for a few months. There are times when Ben Cowan is wrong as well. In 2023, so I saw this. I spoke to somebody before in my community. He said, "Oh, Ben Cowan was wrong in 2023," and I just searched it up. He was wrong. He said that Bitcoin is going to go down, but it actually went up. And maybe for him, it doesn't really matter because maybe he has a stack of Bitcoin that he's holding on to, and he's just trading a small amount. But what if what if you own no Bitcoin, and this is the thing that you're depending on to make your decision? You own zero, and then the price doubles out of nowhere. What are you going to do? You're screwed.
Yep. You're screwed. You're left out of the market. It's not where you want to be. And
he's not going to make up for your losses.
No. And he's not going to care as well, because
he doesn't know you.
He doesn't know you. And the way he makes money is by talking about trading.
Yeah.
So it doesn't really matter about his own personal positions either, to be honest. It's about income for him, talking about it. So the only the more guaranteed returns you have is by investing for the long term. So that's why that's why I said like selling at any point is a short term. You have a short term thesis. Buying is having a long term thesis. That's why they call it longing and shorting, right? Or maybe that's not why, but you can analogize that. And so that's like the only thing that you can generally give as advice is be super long in your time preference and hold Bitcoin. Anything else is really just like gambling.
Yeah, and when you think about how much time you have in a day and how much energy is finite. You only have so many hours in a day. And if you're trying to figure out what oil is going to do and what the stock market is going to do and what this crypto coin is going to do and what Bitcoin's going to do, you're wasting your time. And I think that you could actually use those resources much more efficiently to actually protect what you have. So instead of spending all this time and energy trying to figure out what's going to go up next and chasing the next shiny thing, if you just understand what you're actually holding right now and dedicate that time and energy to protecting it, you're going to be a million miles ahead in a decade, and you're going to sleep a lot better. That's what it was for me. I got rid of all my shit coins, everything else, because then I didn't have to watch the charts anymore. I didn't have to try to time things. I was just like, okay, I'm in Bitcoin. I'm going to protect it, and I'm going to do pretty well here, I think. So very simple answer there for me, but I wouldn't bother with it.
I think most people are just looking for. I think most people are just looking for a quick dopamine hit. There was actually a guy who I spoke to. He had 10 Bitcoin. And he was saying, oh, I think Bitcoin's going to go lower. So I'm going to sell what I have and I'm going to buy back when it goes down. And I don't know if it's going to go lower, but when he spoke to me about this, it was at like 62K. I don't know if he pulled the trigger on selling it, but he seemed very confident and he was thinking, yeah, I'm going to get more Bitcoin by doing this. I'm going to be successful. But like, that's the thing, right? Let's say if it does the opposite of what he expected, and that's exactly what it did. It went to 75, 76K. I don't know if it'll go lower, but again, if it doesn't, is he going to be able to get back that 10 Bitcoin? I don't think so.
Yeah, and if it does go lower, the entire time it's going up right now, he's thinking, did I make a mistake? Am I going to have to buy back in? Now I get 9.5 Bitcoin instead of 10. And like, how much patience does he have in this very emotional position where he isn't allocated to something he wants to own more of? It's greed. It's greed that drives people to do this. And I think that I think that it's a good idea to just check our greed and to make logical decisions for, the long term of our life.
That was what it was in his case, because he had a significant amount of wealth. He just wanted more. Like 10 Bitcoin. If he didn't really understand Bitcoin, because clearly if he did, then he would know that 10 Bitcoin is more than enough. But like, he didn't understand it. He just wanted more. He was more concerned with catching up to his friend. His friend had like 20 Bitcoin or something like that. He just wanted to double it. And he was okay with taking that gamble. And I don't think he had really thought about what would happen if Bitcoin does the opposite of what I think it will.
To be fair as well, it's probably the same or similar greed that led him to be able to have 10 Bitcoin in the first place. So he's following that same instinct, but without necessarily understanding the full risk of what he's gambling there.
Yeah.
100%. It's people, when greed kicks in, people make bad decisions. That's greed is a bad one. We have one more a super chat from Isaac Newton, 98. He says, family lost family farm of close to 100 years due to not paying property taxes. It has made me extremely jaded towards the system you never truly own. That's the thing that we talked already about. It's you don't really own it. Like, you just even if you buy it, you just still kind of rent it. But it's a property taxes. What is property taxes in Canada? Is it a lot? Like, is that like 1%, 2%?
It's based on each province. I think it's around 1%.
And it's based off your last assessment as well.
Yeah.
It can be pretty significant, which is also like, you could have the housing market can fluctuate, but then your assessment will be done like in 1 year and then won't be done for a little while. So the prices could go up like crazy. You have a massive assessment and then the value of your home's actually dropped, and yet you're still paying property taxes for this inflated price. And they're debasing the currency. So the price is always on average going to go up. So is the property taxes in line with that. That's a terrible story that Isaac Newton has. That's horrible. And the way I talk about it is there's this large scale of being able to own something, and everything you have in your life is on that scale of actual ownership. And Bitcoin is about as much as you could ever own something, is having the private keys to be able to move a Bitcoin transaction. And, gold is somewhere in there too, but gold can get confiscated. It can get physically taken from you. Whereas Bitcoin, I think, is even higher on that scale of ownership, because you can make it so that it's harder for somebody else to take it from you. So I think, again, I think ownership is on that big scale. And I think real estate and land and things, because of something like property tax, and it's essentially just a huge lease that you have on this from the government or the crown behind it even, that they can just take that from you if you don't pay this tax that they're forcing on you. Like, that's basically like, taxes is always just essentially theft under the threat of violence. And that's what this is, right? They physically, it could have gone down to them physically having to move you off of that property. That's violence, pushing you away from a piece of like a square foot that you're standing on and land. That's violence.
Thanks, Joe, for reminding me. I almost forgot today. We have to shout out to the BTC Mastermind channel. It's where we are taking questions in, where we get the inputs. So like if you have any questions, any things that you want to have an episode around, any kind of inspirations for us for what we should talk about in those weekly sessions, I search in all of the comments of this channel and this channel only. What are questions that people comment on the videos, on the live streams and all of that, and take them into account. So if you want to post some questions after the live stream is done, or your question kind of got like lost in the live stream chat because we couldn't keep up with too many messages, just post them as a question in the comments, because there we get like 2 a week or 3 a week currently, and in the live stream it's like, I don't know, 100 something like that in like an hour. I don't know exactly the statistics. So if you want to post some questions, give inputs on what we should talk about, BTC Mastermind channel. Also long term we will be only hosting that conversation on that channel, and we'll slowly go on this channel only. Shout out to the many people that already are on this channel. In the beginning, like 1 month when we launched it, like 2 people or 1 person or something like that watched, and this time it was consistently around 20 to 25 people that watched on that channel. So thank you so much for everyone that is watching on this channel. Just a reminder that long term this weekly format will be on that channel. And yeah, anything else you guys want to add today?
Yeah, get your asses over there. Let's have everybody in one spot. It just works way better. But I actually really love the play there, Robin, because I mean that's perfect. You're pretty good odds if you got a question or discussion. Leave a comment on there, and it's not like we're coming up with this stuff. It's based on what people are asking for. It's the supply is based on the demand. So great topic today, boys. Hopefully people get a lot of value from this. Somebody in the chat was asking if they can send sats for some donations and support. We don't really have anything set up yet. I don't know if we will or not, but we're just having fun doing this. We like talking about this stuff. Hopefully people are getting value from it. And it's been another great week. So thanks everybody in the chat. But yeah, try to migrate over to the BTC Mastermind. Once we have X amount of people watching the lives, and we'll just kind of close it off. But it just makes more sense all around, just to have everybody in the same spot. It's easier for us to track, easier for people to converse back and forth. And it's very easy. You just literally go click a button, subscribe, and show up there next week.
Awesome. Then thank you so much, guys. And I'll see you guys next week.
Thanks, guys. Thanks, everybody.
Later, guys.